Hello and welcome back to Core Finance. I'm Matt Brown. This is the second of 3 videos today with Craig Erlam, who is a senior analyst at Oanda. Thank you for coming on again, Craig. We're going to look at the Great British Pound. Now, the pound has been, I've read today, the best performing currency out of the G10 currencies in September. So we saw a lot of strength in the pound, really kind of driven by Mr. Carney and co. But it feels like it's given a bit back now.
Yeah, I think it's necessary. I think I've said in one of these previous videos, we reached these kind of 136 levels, and I was really struggling to justify it. Yes, we're expecting a rate hike, and yields have gone up on UK gilts, so you would expect some pound appreciation with that. But to get to 136, 140 was the lows of pre-Brexit, so we were really getting back to the kind of levels we were seeing before all this kicked off, and nothing's really improved. Yes, we've not had the recession that some people were calling for, but I wasn't sure whether 136 was really justified. So when we started to see the correction, it didn't come as a massive surprise. This 132, 132.50 level is just a standard support. It really wouldn't surprise me to see some consolidation now between 132, 136, if we can hit those highs again. 132 is previous highs. We could go further back on the chart here, but I didn't want to hide all the information that we had on this part. 132 is previous resistance, previous support, so it's a natural support level. It's a 50% Fibonacci retracement of the September lows to highs as well, where you can see where everyone is support. We could come back a little bit further maybe again, but I think 132, 136 is a notable support zone, and given that the Bank of England is still talking about raising interest rates, I'd be surprised at this moment if we break through 132. Not shocked, but I'd be a little bit surprised because, like you say, there has been a lot of bullish momentum throughout September. So to see a bigger correction than that 50% seems a little unlikely at this stage, although I am partially maybe ignoring price action a bit. So, like I say, 132 is notable support. If we break through there, then the 61.8 fib around the kind of 131s becomes notable, and then 130 below that. But the idea of getting back towards 130 without the Bank of England changing its mind on that rate hike seems a little bit much, in exactly the same way that 136 looked a bit much to the upside. And I did see something the other day about non-commercial positions on the commitment of traders report become positive for the first time since the Brexit vote. So maybe that's a sign as well that people are finally becoming a little bit more bullish, which may be supported around these kind of 132 areas. But like I say, I struggle to see 136 being broken because one rate hike doesn't change anything.
Understood. Thank you very much, Craig.
Cheers.